we can now start. I want us to look at profiles. So I want us to look at profiles. So our lesson today is profiles. So under this we have something that is called a fractal. This is a fractal model. And you have always heard me saying at the beginning of every week, we start from a weekly perspective, and from the beginning of every day, we use the previous day candle closure to determine where we expect price to go. From a weekly perspective, we come up with this expectation. Where do we want this week price to go? And then through using the daily candles, we are going to observe, is price headed to our weekly objective? Because at the end of the week, we're going to review, our weekly objective was our weekly objective met? Yeah. So so we're going to start with the profiles and the fractal model. And this approach is built around time frame alignment, starting with identifying the bias. You see, the other day I was telling you, we talked about time frame alignment, and we said that the higher time frame is used for understanding. It helps us to understand our bias. Then we go to our intermediate time frame for our market structure, and then we go to our lower time frame for our execution. So the daily bias or the daily bias always comes first. So if we were to starting with a weekly profile, okay, the weekly profiles. Under this, and I have mentioned this in my video, we have three. We have three types. So number one, from the weekly profiling, we have a classic expansion, week. Number two, we have a midweek reversal week. So number one is a classic expansion week, midweek reversal week. And number three, we have something that is called a consolidating and reversing week. Consolidating and reversing week. So these are the main profiles that we have. So if we were to start with a classic expansion week, I think, let me use this, it will be easier. With our classic expansion week, so we start here with our classic expansion week. Classic expansion week. So on a classic expansion week, what do we have? So this is also called a classic buy or sell week. Yeah, so here, what the characteristic of this is that on Monday or Tuesday makes the high. So if you are selling, if it's a classic sell week, we expect Monday and Tuesday to make the high of the week, and then or low. If you are buying, we expect Monday and Tuesday to make the low of the week, and then the other days, that is Wednesday, Thursday, to expand. And then on Friday, on Friday mostly we have something that we call Fridays, because we said the market is opened 5 days a week. So on Friday we have something that is called TGIF. So this is just, thank God it's Friday. So we are going to see that. So if I was to draw this and to map out this, so we have, if it is a classic buy week, we expect, so here is Monday open, Monday and Tuesday, and then Wednesday, Thursday, pricing expand higher, it goes higher, and then that Friday we have a retracement, and then pricing are close at that point. So this is a classic expansion week, and this is what we say Monday or Tuesday makes the low of the week, because this is the low of the week, and then Wednesday and Thursday we expand higher, and then Friday, which is a TGIF, we expect price to retrace a little bit and then close. So hiyo inaitwa TGIF, but sometimes you can find out that we can also have an expansion through Friday. So we have expansion Wednesday, Thursday, and Friday, like we had in this week that just passed. We had a classic expansion week. No, we didn't have that. It was a midweek reversal. Yeah, so this is what you normally have. This is a characteristic of a classic expansion week. So that weekly candle, because it is formed by 5, so we have a 1, because we are bullish, we have a 1 week candle that is formed by 1 week candle that is formed by 5 daily candles. So this is how a classic expansion week looks like. So if you were to break this into 5 candlesticks, you would find out that we have Monday. Let me try to draw this quite fast. You have Monday, which is Monday starts like that, and then Tuesday, and then Wednesday, and then Thursday, and then Friday at TGIF. And then we have the weeks. Now you realize Tuesday or Monday.
TGIF in full means?
Thank God it's Friday.
Oh, okay.
Yeah, so this is how a classic expansion weeks looks like. So you of course now each candlestick has a week, so there is no need of placing everything here. So this is how a classic expansion week looks like. So this is on Monday, on Tuesday. Monday or Tuesday forms the low of the week if it's a buy. So if it's a sell, it is the opposite of this. So we have this Monday and Tuesday forming the low of the week, and then we have an expansion through Wednesday and Thursday, and then we can have a TGIF on Friday, which is a retracement within the range, or we can have another expansion on Friday. Yeah, so this is just a classic expansion week. Yeah, so, and the opposite is true of this. So we can go ahead, and I hope you have understood that. And guys, this meeting is being recorded, so, and it will be posted, so don't worry when you find your sound and your sweet voices in YouTube. I hope they will increase my views. Vivian. Yeah, so yeah, so we can go ahead and look at our midweek reversal. On Tuesday, most it is usually midweek reversal, which can happen either on Tuesday or on Wednesday. So you'll find others calling it a Tuesday reversal or a midweek reversal. So I like to refer to it as a midweek reversal because it can either happen on Tuesday or on Wednesday. So when it comes to a midweek reversal, midweek reversal week. So this one, it is characterized where we have a C2. We have, you remember when we were talking about a C2, we have a candle 2 closure, C2, which is a reversal candlestick. You remember the shape of a reversal candlestick, how it looks like? Yeah, it's a reversal candlestick which is formed on either Tuesday or Wednesday. So that is formed on Tuesday or Wednesday. And then in this week now we look after C2, what do we expect? We expect an expansion higher. After candle 2, a C2, a candle 2 closure, we expect price to go to expand higher. So we trade candle 3 and candle 4, which are expansion candlesticks. So candle 3 and candle 4 are expansion candlesticks. So this can be one scenario, or we can have scenario 2. Scenario 2, we can have Monday and Tuesday, expanding to one direction, then Wednesday reversing, Wednesday reversal, then Thursday and Friday expansion to the opposite direction. So if, for example, Monday and Tuesday we were expanding higher, so we are going higher, and then Wednesday we had a reversal, so we expect now Thursday and Friday to expand to go downwards, to expand in the opposite direction. This is a midweek reversal. So we can have either scenario 1 where we have a C2 that is formed on Tuesday and on Wednesday, after consolidation. So if I was to map this out, how this looks like is something like this. Now that one weekly candle will look something like this. Okay, let me use a bullish example. So we'll have something like this. With a very long wick on one side, something like that. Then now this candlestick is, I want it to be a bullish candlestick. So this is this is a weekly candle. This weekly candle will look like this. So if we were to map out this on the daily time frame now, so on Monday we would expand lower. So we have Monday here, Monday, Monday. You have Monday. You have Tuesday. Expanding. Now I'm giving a scenario 2 example. So Monday, Tuesday, and then Wednesday. We have a reversal. Oh, this was supposed to be a bearish. Then Wednesday. So Wednesday we have something like that. So then we look to trade to expand higher on Thursday. So I want this to look like a classic reversal candlestick. A classic reversal candlestick, we said it has a long wick on one side. So we will have something like this. So you guys understand that each candlestick has a wick. So I don't have to place every wick on each side. But for the purposes of learning, we have something like that. So you realize here, so this is a classic expansion week. I mean a midweek reversal, sorry. So this was on Wednesday, we had a reversal candlestick, and then Thursday expansion higher, and then you can also expand on Friday higher. So we can have something like that. So this is a classic, this is a midweek reversal, sorry. It's a midweek reversal. So this was on Monday, Tuesday, Wednesday, we had a reversal candlestick, which is a C2. Then we are looking to trade expansion candlestick C3 and C4. Now this is a midweek reversal. Sometimes we can have Monday and Tuesday consolidating. Then Wednesday taking the high and closing, and then Thursday expanding lower that way. So we can have Monday, this is on Monday, this is on Tuesday, they accumulate. For example, this week I can predict we are going to have something like this, because on Wednesday we have FOMC, which is a major federal meeting. It's a federal open market committee which decides on the interest rates. So, and it is on Wednesday. So expect to see Monday and Tuesday accumulating, and then Wednesday manipulating, and then Thursday expanding lower. So on Wednesday we expect to have a C2 And then Thursday and Friday we can trade to lower or upper depending on which currency we are looking at. This is now a midweek reversal. So, and this is how we establish our bias now. You see, this is how we establish, because if you already have this now on a daily time frame and you're expecting now to see prices going higher, maybe we're expecting this week we are bullish and we expect to have a bullish weekly candle. So we'd wait for something like this or something like this, you see. So we are going to understand this as we'll be back testing, and you shall understand everything what I mean here. But just understand that we have a midweek reversal week. So where Monday and Tuesday they are going to one direction or expanding in one direction, in which in this case we are seeing Monday and Tuesday expanding lower. Then on Wednesday we have a reversal candlestick on Wednesday, and then Thursday and Friday expanding to the opposite direction. And this is a rejection candlestick or a C2. So these are C1, C2, C3, C4. Or we can have an accumulation from Monday to Tuesday, and then a manipulation on Wednesday, and then a distribution on Thursday and Friday. So that is a classic. Sorry, this is a midweek reversal week. Yeah. So the last one is a consolidating and consolidating and reversal. This is simple week. So for this we have a consolidation from Monday to Wednesday. Then sorry, after we have that, then Thursday manipulates, then what does it manipulate? It manipulates the high or the low of the range formed from Monday to Wednesday. Then Friday expands. So what we see here is something like this. We have Monday, Tuesday accumulating, and then Thursday manipulates either the low and gives us something like this, and then it manipulates the low or the high. It can either manipulate the high or the low, and then Friday expands higher. This is what we call an AMD. So this is accumulation, manipulation, and then distribution. So if you ever hear someone say AMD or the power of 3, PO3 stroke power of 3, so this is what we are going to use also when it comes to now after our daily profiling. Now here we are discussing about our weekly profile. Basically, how do we form a weekly candle? So when you shall be looking now at how a daily candle is formed, we shall be referring to this AMD. Yeah, so this is a consolidated and reversal week. So we can have Monday, Tuesday, Wednesday consolidating. For example, I can draw this here. Something like that. So of course we have each side, we have a high, each side we have the wicks on each side. You can have something like that. And then this is Monday, Tuesday, Wednesday. And then Thursday, we either manipulate there. So this was on this point. So Thursday, we can have something like this. You see? Something like that. We manipulated there. We have manipulated the highs. And then closed within the range. So you can see here, we have manipulated these highs. And that is what we call a liquidity sweep. Because in a consolidating market, we create liquidity on both sides, this side and this side. So Thursday manipulated the high. So we expect now Friday price to continue lower. So to expand lower. So, and this is what we shall be having. We shall have something like that. And these are the three main profiles for every week. Yeah, so we have something like that. And something you need to note, yeah, so I hope you have understood that. We can refer to this video anytime. So we always want to avoid trading on Mondays. Avoid trading on Mondays because Monday is never an expansion day. You never find any. You have not talked about any expansion happening on Monday. Yes, we'll find there are sometimes you'll find an expansion happening on Monday, but it can be very confusing. So you want to see how the Monday candle closes. So, and Monday does not give us data for the week unless it's a classic expansion week. So if it's a midweek reversal or a consolidating reversal week, Monday does not give us any profile or any data, because if you are looking at a classic expansion week, we have said either Monday or Tuesday can give us the low or the high of the week. Okay, so the only time that we refer to Monday and it's on a classic expansion week, but the other days, Monday, you want to avoid trading on Monday. So, and you want to avoid, number two, wait for high impact news day to pass. For example, this week that is coming, you have FOMC. So we want to wait for the FOMC news to pass, which is on Wednesday. So we'll be looking to trade on Thursday and Friday, because you'll find most of the time before news, you always have a ranging market or a consolidating market. So yeah, so we are going to apply this now onto a daily time frame, and then we see how we are going to apply this into executing our trades. Yeah, so the next time we shall be looking at the daily profile. So I want us to look at just an example here. Just an example here. So this is what we have been talking about. Yeah. Okay, so we can look at an example. For example, in this week that has just passed, we can look at which profile we are getting. So our week began here. So this was on Monday, then Tuesday, Wednesday, Thursday, Friday. So what do you realize? This was on Monday. So Monday we expanded higher, and then on Tuesday, what did we have? We swept liquidity, these highs, and closed within Monday's range. You see here, we closed within Monday's range. So, and this is what you have said. Monday expanding into one direction, and then Tuesday giving us a C2, because this is a reversal candlestick, you see. So this week we had a midweek reversal week, because on Tuesday, after getting this, now we were looking to trade Wednesday C3, C4, and now we also had a C5, which is very rare. We we normally have a TGIF, or on after this massive expansion, most of the Fridays they're usually consolidating. Yeah, so because it's at the end of the week. So you see here, we had a midweek reversal, which happened on Tuesday. So on Tuesday here, 10th of March, we had a C2. We call this a C2 because it is a middle candlestick that forms a swing high. So this is a swing high that was formed after manipulating or taking out these highs here. Yeah, so, and you also realize it was formed from this. We have, look at this, we have this small, we have this, look at this fair value gap here. Look at that fair value gap, bearish fair value gap. You see, we reacted from this bearish fair value gap here. Yeah, so giving us a midweek reversal. This is just an example of a midweek reversal profile. So after we had this, now we are looking to trade now Wednesday, Thursday, and Friday. And how this forms, you have to realize a bearish candlestick is formed. We have open, high, low, close. So because we are looking, we don't want to go against the trend. We want to sell. So we would go to 1 hour, map out our structure, because we have already established our bias. We are bearish. So, and this is where it happened. This was on Tuesday. Then on Wednesday began here. Wednesday. So you see, on Wednesday, price came back to this fair value gap. We had a 1 hour fair value gap here. We had a 1 hour fair value gap that price returned to. So after that, we had a change in state of delivery. So if you listen to the video that I've sent a change in state of delivery plus a fair value gap, they will always give you powerful entries. Just look at this. We had a change in state of delivery here, and a fair value gap, this fair value gap here, and you see how price melted now to the downwards, to the downside. Yeah, so that is just an example. We're going to look at this one. We'll be back testing, and I'll record more of this. Yeah, because of time, I would like to end there unless you have a question. Yeah, but I hope you have understood the profiles. So we have a classic expansion week, we have a midweek reversal on Tuesday reversal, and we have a consolidating and reversal week. So depending on how, that is why we always refer to previous day candle closure, because it will give us an idea of which profile are we expecting this week. Because if you're expecting a classic expansion week, now we expect Tuesday or Monday to form the low of the week, and then Wednesday, Thursday to continue higher. And if you're forming a midweek reversal, we expect now to have a C2. The moment we see a C2 at candle 2 closure, we always wait for to trade now the candle 3 and candle 4 candles. So you have to wait for that. Yeah, so I hope you have understood that. Yeah, see, anyone with a question can ask, And for the sake of ending this, those who have questions, you can always ask me.